What's up guys, Simon here. In this video, we're gonna go ahead and talk about the next potential market crash that is gonna be happening again. And this could be the biggest crash since the dot-com bust, or maybe even the 2008 crash that happened with the real estate market. There's a lot of factors we're gonna go ahead and cover in this video so that you are well prepared and that you have the best opportunity to avoid the crash with your investments. This includes stocks, real estate, cryptocurrency, which we saw fall pretty recently, and everything else in between, including the rising living costs, energy costs, and we're going to cover it all in this video. So as always, I ask you guys to show some love, and the biggest favor you could do for me is hit the like button for the YouTube algorithm, subscribe to my channel if you have not done so already, and let's get into this video and discuss the biggest potential crash and how we could prepare for it. Okay, so everybody has seen the market slump down. I mean, stocks are down from their highs. Cryptocurrency plunged. In fact, Bitcoin nearly plunged 20% in one day. The meme stocks, Dogecoin, returned back to 15 cents, which is horrible, from a high of 75 cents and where it was hovering around 30 cents. So all the cryptocurrencies have fallen. The Fed's wanting to raise the interest rate. The new Omicron, however you say this virus's name,
is called the Omicron.
It's not Omicron, Joe. It's Omicron.
It sounds like a transformer
from the planet Cybertron.
So now there's a new virus. They're pushing a new booster shot. And of course, anytime there's a new virus, it creates uncertainty in travel. So travel again is affected. That means the airlines are going to be affected. Tourism is going to be affected. Cruise ship industry again is going to be affected with the new virus that's coming out of South Africa. That is going to relate to the stock market. And as soon as that new virus was announced the day after Thanksgiving, we have seen massive stock market price drops. And that is going to continue potentially to happen given the fact that the Feds are a bit uncertain where they are going with the interest rate relative to inflation and rising living costs. Yet the jobs report was very low in regards to how many jobs were created last month. A lot of things are happening, and remember, this is holiday jobs. This is where jobs are always at their peak.
Target says it wants to hire less people this holiday season. The company says that it will focus instead on its current employees and is working to give them more hours and higher pay. It also introduced an app that allows employees to swap shifts. Target says it wants to hire 100,000 workers for the holidays. According to Bloomberg, that's 30,000 less people than last year.
Even part-time hires or seasonal hires right now are not being hired because they're either collecting unemployment or they're not going back into the labor force market. Could be due to vaccines. It could be due to some of the other things that are happening. People are trying entrepreneurial venues or directions nowadays. But overall, the job market had one of the weakest gains during the holiday season on record. As soon as the new virus was announced, the transformer virus is what we're going to call it, the stocks plunged. And as soon as the stocks plunged, we saw a reflection on many things, including cryptocurrency. Crypto also plunged along with the stock market. Typically, we see cryptocurrency or Bitcoin remain valuable or hold its value when the stock market is in trouble. And this time around, it did not. So that worried me. That's the first sign that I'm thinking, oh no, here we go. We might be heading for a potential crash.
I'm freaking out, man.
Then the Feds discussed increasing the interest rates. As you guys know, the Feds had some of the lowest interest rates in the history of interest rates.
The 30-year fixed mortgage, which is the most popular home loan, decreased to 2.9%. And that is the lowest rate since February 18th. So that's at the start of the home buying season. And the reason mortgage rates are falling is because they're following the yield on the 10-year Treasury, which also fell based on economic concerns and expectation for the Fed's next move on rates.
But now, because the Feds have printed so much money, the interest rates are due to go up to curb inflation. So what we're seeing is a potential inflation, and at the same time, we're seeing rising costs, but wages are not increasing, and the job market is not improving to pre-pandemic levels. The Bitcoin and the cryptocurrency plunge. I was shocked to see Bitcoin drop so much in one time. And then I was also shocked to see all the other cryptocurrencies plunge. Every single crypto that I have invested in, from Dogecoin to Ethereum, Cardano, Shiba, you name it, SafeMoon, they have all plunged, and they've plunged pretty heavily, some in the 30 to 50% mark. So wiped out a bunch of money. It devalued the money that we have in cryptocurrency. And is it going to rebound? That's the question. However, typically when the stock market struggles, cryptocurrency holds its weight, and this time it did not. So that's a big sign as well. Another big thing that I've been reading about in these articles is the crypto whales. There is a website tracks big purchases from crypto whales or whale investors. What a whale investor is someone that buys a lot of a share or a coin at the same time. So we're talking someone that may sell 2 billion Shiba coins or 5 billion Dogecoin coins or whatever it may be. So those are the whales. They influence the market. And I've always wondered, are they purposely doing it at certain times to crash the coin, buy it back, and then sell it again? I would not doubt it, to be honest with you, but these whales have been selling a lot of cryptocurrency as of recently in big dumps, which means that they expect the market or the crypto market to also crash. That's not good news for anybody. When a whale dumps more money out back into the market, crypto crashes because the supply increases, the price goes down, etc. And maybe some guy is pulling the strings with cryptocurrency, lowering the price. Maybe they're buying it back at a lower amount and then selling it again in a repetitive cycle and getting ultra wealthy. But for us, regular Joes like you and I, when a whale dumps, prices go down, and that is another sign of a potential market crash. Then the government has had capital gains proposals. So they are trying to take the capital gains in 2022 to 28%.
We heard about a Biden capital gains tax increase during the campaign trail, so that was nothing new. And he did want to align it closer to current income tax. So he wanted to put investing in labor on equal footing when it came to tax rates. But what is new, at least in my mind, what's new is the original plan was to tax anything, a capital gain in excess of $1 million, which would be a smaller subset of investors versus taxing capital gains for anyone, whether you're taking a $10,000 capital gain or a $10 million capital gain. That is different.
That's not good. That may force a big sell-off in stocks and cryptocurrency as well, because people don't want to pay 28% that make over $400,000 or more. So they're going to go ahead and try to sell off their crypto and stocks now. That could also lead to a potential crash because all of a sudden the stocks are going to go down based on the sell-offs. Then the real estate market, how could we forget about it? So many people have seen a flourishing real estate market. One of the biggest areas in flourishing real estate has been Florida. Florida real estate nearly doubled in some places. And I've seen homes that were sold for $700,000 several years ago, all of a sudden going up to $1.5, $2 million in the Florida market because people love their freedom and they want to move there. Texas has seen an increase in real estate. Even California, where we are, has seen an increase in real estate. However, the time has come, the real estate market is also slowing down, and it is possibly just the start. One, the Federal Reserve rate is increasing, so less people are able to afford real estate, yet the inflation is going up. Two, more homes are going to be on the market soon because the moratorium has ended. The deferral of loans has ended and people are struggling to pay back all of those deferrals to the bank. So for example, if you have deferred your house payments and the bank has paid your escrow in those real estate deals, all of a sudden you are forced to catch up on your escrow payments. And what the bank is doing is they are making you pay, say, in 12 months, etc. So all of a sudden your mortgage payment, maybe it was $5,000 before, is now $6,800. And for someone that doesn't have a job or does not have a steady income, they are no longer able to pay off the escrow payments or those deferred payments in the time span that they have. So that is an issue. We're not talking about the principal and the interest payment of your house, but if you had escrow titled into your mortgage payments and the bank has paid it, they're going to want that money back sooner and get you out of that deferment. So we potentially will start seeing a lot of foreclosures on the market to the level that we saw in 2008 through 2010, because now people are not going to be able to pay back their mortgages. Guaranteed, a lot of people are going to be underwater. Now, while home prices are up nearly 20% year over year, the month-to-month jump in September was just 1.18%. That is not a good increase in home prices overall in the market. They're definitely not going to be able to maintain that 19.5% annual rate increase, or nearly 20%, which we have seen. Therefore, that is indicating a slowdown in the market. And with everything else that I discussed earlier, this is going to lead to another crash. Now, Redfin, one of the biggest online real estate websites, has predicted that real estate will only rise 3% in the next year. And the Mortgage Bankers Association actually is predicting that real estate prices will fall from their peaks and decrease by 2.5%. Historically, real estate since the 1980s has been rising about 4.6%. So Redfin is estimating that that rise will be below the historic year-over-year percentage since 1980. And then the Mortgage Loan Association is predicting that actually there'll be a decrease. That is a big difference. And Redfin's also predicting that the current Fed 30-year mortgage will be 3.1% in 2021, or at the end of 2021, and then it will be at 3.6% at the end of 2022. Relatively still low. However, that's a point higher, or a percent higher than it was potentially earlier on, when you could have got a really good interest rate. So the price savings you would get on a home would be wiped out by the interest rate increase, further leading to a potential slowdown in the real estate market. So we discussed big expenses coming your way, with the job market not being as good, maybe with your wages not growing as fast as they need to, but the living expenses have increased. The cost of food has increased. Eating out at a restaurant now feels like every dinner that you go to is nearly $100+, which is incredible. The gas prices are over $5 in California, and in some cases in the high $5. Now, this is in California, which is ridiculous because we have some of the nation's highest, if not the highest, gas taxes out. However, gas has increased overall everywhere. So transportation has increased, logistics, shipping has increased. Getting products into the United States has cost companies and small businesses a lot more than it did in the past. In fact, a container to ship from, say, overseas, a country like China would cost normally $1,500 to $2,000 for a 20-footer, and sometimes even a 40-foot container now costs $15,000 to $17,000 for the same container. That is going to drive the cost of good prices much higher. So all of these businesses that are supplying any of these stores are eventually going to have to raise their prices. Those price raises are going to carry over to you when you're purchasing a good. So your living expenses are increasing. That's also going to lead to a slowdown in consumer demand and further potentially crashing the markets. So how do you beat all of these potential variable risks and still stay ahead? Right now, I would personally be very careful with any investment that I would make. I am not going to be investing until I see what happens through the end of the year. The only solid investments I would personally make is maybe real estate on very good streets or locations, or very hot properties in neighborhoods that I'm familiar with. In terms of cryptocurrencies, in terms of stocks, all of these markets right now are experiencing either a correction or crash already. And either way, I don't know if it is a good time to go into it, given the fact that we might see even a further correction or crash. We don't know what's going to happen in 2022, if the hyperinflation is going to kick in and the prices will continue to rise, but people won't continue to be able to afford and keep up with those prices. It could lead to a middle class almost being wiped out. So my advice, and always check with the proper advisor, I am not a financial advisor, is to be careful with your investment. I am going to be careful with mine, but as an investment channel or a finance channel and an entrepreneur channel, we tend to dabble into many things together. And I wanted to make sure that you guys are prepared for what's ahead, which is a potential market crash that is happening for the various reasons that I mentioned right here. And who knows, we may even see another virus name launched, this time again, the market could tank. So it seems like every time something's going on or we're on an upward trend, we get knocked back down with a new variant. And this has happened this time, and it's caused the markets to really stumble and correct themselves. And this is not a good thing for anyone that is investing. So when you invest with a long-term investment in mind. Know that the company is going to be there in the long term and that you will not need your money pulled out right away. On top of that, know the value of the company and what it brings for the future if you're investing. Same thing with cryptocurrency. If you believe, say, Bitcoin's here for the long term, you don't mind seeing your $100,000 investment drop to 60 and then back up to 120, then you could ride out that wave. But right now is risky. I'm a bit worried. Let me know in the comments below if you guys are worried as well. And hopefully we avoid a crash. But I swear we've been on an upward trend since 2008. So now maybe is that time. And it seems like throughout history, every 10 years, there is some type of crash. So let me know what you guys think. Again, the biggest favor you could do for me is like the video, subscribe, share the video, and also comment below. Are we going to have another crash or is this just a correction? I read the comments and I'll reply to you. And if you enjoyed this video, I appreciate you as well. Catch you here in the next video.